Hello, everyone, and welcome to Chartwise Women with Erin Swenlin and Mary Ellen McGonagle. Welcome to our Thursday, February 25th show, 2021. We have lots to cover today, but we will want to educate you. We have a very good subject to educate you on. We want to engage you. And then, of course, most importantly, we want to empower you to take control of your investments. Nobody cares about your money more than you do. How's everything going, Mary Ellen?
Oh, really quite well. Yes. I live in a part of LA that has a fourth weather component. You know, you talk about rain and snow, and we have wind. And it
Yes.
is to the point of absolute distraction. It's kind of spooky at night with these big whistling winds, the windows rattle. So yeah, just batting down the hatches.
Yes.
Yeah,
We had the wind this morning, but it's died down. It usually stays pretty calm where we're at, just a couple hours from you.
yeah, it's
All
interesting.
right. Well, we have a lot to cover today. We're going to talk about relative strength. And, you know, it's all relative, right? So we're going to talk about relative strength. We're going to look at different stocks. And really, the main one, of course, is to help you find those market outperformers so that you can build your confidence level in what you are investing in. And it really can help you find those, really help you discriminate between one stock from another just based on their performance. And we have a couple indicators that we like to use. So we're going to talk more about what is relative strength.
Yeah.
First, our wisdom of the week. Mine's the first one, and relative strength does uncover the best of the best stocks. So you can go into a very successful group, and then you can check for the relative strength. So that way you're getting the best of that best industry group or sector.
Yeah, and my bullet point there talks about strength. I say begets strength, and that's all about my work. I'm all about uncovering where that strength is so that you can capitalize on the momentum. So we're going to really dig into that today as far as how you can uncover where those outperformers are, because again, that concept that if they are either just emerging as a leader or are already a leader, you are well served to participate in their moves.
Absolutely. What do we say? Winners keep on winning, right?
There you go. Yeah, unless the market hits a speed bump like we're seeing today.
Correct. Of course, a lot of good outperformers can end up getting sucked into the vortex of a big bear market move, but you usually can still find those pockets of outperformance, which I've learned from you, Mary Ellen.
Yes, I'm pleased. Hopefully others have picked up on that.
Yes. All right. Well, let's go ahead and talk relative strength. And what really is relative strength? What are we talking about here? Relative strength is you're trying to compare one security to another security or even a security to its sector. But basically, it's all about comparing the two things and coming up with what looks better, and one of the ways we can do that is using our relative strength indicators. And two of them are the price relative. So you can just pretty much put right on your chart the relative strength just by adding a few indicator windows. And then the StockCharts Technical Rank, it tells you the StockCharts Technical Rank I find especially helpful because not only does it give you that relative strength, comparing that security across all of those in its universe, but it also gives you a read on internal strength because the higher that number is, that tells you that the internals for that particular stock, ETF, sector is doing well on its own, just that it has a really good price performance on its own. So being able to do both of those things is really important. All right, so I'm going to talk a little bit. I'm going to share my screen and just give you an idea of what I mean by comparing to one another and how you can do that. So we're talking about price relative, which is relative strength. So price relative to whatever security you want to or market, industry, whatever it is you want to compare it to, this is how you would want to do this. So price relative, we already talked about it, does compare to another. I'm not going to go through the actual calculations there for you. But what I want to show you is here's what we add, right? Here's Starbucks relative to the S&P on this chart. And you can see that when that line is rising, it's outperforming. When it starts to move downward, then it's underperforming what's going on in the market. So it's a pretty simple concept once you put it on your chart. And then there are a few, a little bit more, complicated things about it you can read about, but looking at just those, whether it's going up or whether it's going down, is very helpful. But you can also start looking at divergences. So if you can see the relative strength is moving higher against the SPY, but the price is moving lower, that's a bullish sign. They're starting to see that outperformance, even though it's not reflected in price. It's usually telling you that you're going to see that bear market or that bull market move out of that. So the bearish divergence is exactly the opposite. You're seeing that performance is starting to drop off even as price is moving higher. And that usually tells you that you're getting close to a low or a stock moving sharply downward. So that's pretty much the price relative. Putting it on the chart, I'll show you a little bit later, but I want Mary Ellen to talk to us first about the StockCharts Technical Rank.
You bet. Yeah. Better known as the scooter. SCTR is the ticker symbol. So I am going to explain that to you. It is a super powerful indicator, and it was developed by Mr. Murphy himself. And so here we're looking at from StockCharts.com. We can see a wonderful description, well worth the 5 to 8 minute read. And what I wanted to share with you with this technical ranking is very quickly how it's calculated. As mentioned, John Murphy, author of many famous books about technical analysis, did formulate this. And so the stocks are scored a ranking on 6 key indicators. So let's just take a quick look. I'm not going to spend, you can delve in a bit further, but what I did want to point out to you within that calculation is that a majority, 60% of the calculation is longer term looking. And the reason for that is a lot of it is because if the stock, how far above it is or below its 200-day moving average, quite simply, that longer term trend is going to be the most powerful. And then from there, we drill down into medium, and then the short-term weightings are the least. Only 10% of that 100% calculation is super short-term weighted. So you can really hang your hat on this particular indicator, this rating. And then from there, I'm just going to drill down a little bit further here and share with you the fact that those scooter ratings are not for each individual stock. It's not relative to the entire market. And really, it is, each stock is put into its market capitalization. So large cap stocks are compared against large, small, and so forth, also within their industry. So it really is very peer specific as far as comparing that stock to its true peers. So from here, it does go on to talk about examples, but I'm just going to take a minute here and share with you how you can quickly get in front of stocks using that scooter. So we're looking at this member dashboard, StockCharts.com. I'm going to just pull up very quickly a candle glance view. Just today, these are the top 10 stocks up the most in the S&P. Twitter really looking quite attractive. So from here, what you can do is go ahead, put on a full quote. The reason here is because we want to see what group is this outpacer a part of. It is in the communication services sector, and then part of the internet grouping. So quite quickly, what we can do from here is then go ahead into that sector summary. We can go into communication services, internet, sort it by scooter. And we can see that Twitter very clearly is up here in the forefront. SNAP is a name on my MEM Edge report, another big, nice outperformer, but it is getting hit today, but that's an exercise in how you can then quickly uncover within any given industry group the top names so that you can participate in the potential upward movement.
Absolutely. Before we go to break, I'll just show you very quickly how you can add that relative strength onto your charts, because I use all of those on what I cover. So let's just pull up a random stock. What symbol you want to throw at me?
SFIX.
SFIX, my favorite. It's not been doing quite that well, has it? It has started to pull back. So anyway, you always see this RSI. We always seem to have that on our charts. I know that I do my PMO, the volume. Here's the scooter. And you can see by watching just where it's at, how its relative performance is amongst its peers. And right now, obviously, Stitch Fix is still showing a really high scooter ranking. So that tells you, likely this is a pullback, and it's a strong enough stock internally and relatively that we should expect a rebound on it. I don't see it happening that quickly. But here's how I added relative strength to my charts. So I like to compare first the industry group to the index. So in this case, we're looking at the clothing and accessories industry group, and I'm comparing it. And so you can see right now, as far as just that industry group goes, it is outperforming. You have these rising bottoms. So that's a pretty good sign. But then look at Stitch Fix. Compared to the S&P, not outperforming here. It is actually trending lower. And when you compare Stitch Fix to that industry group of that clothing and apparel, you can see that it's also not performing so well. Now, if you want to add these to your charts, I'll stop here and make it give you a chance to freeze the screen, if you will. But you just add these price indicators, and then you put in the ratio you want. To make it easy, and this is, I copied this from Tom Bowley, but you can put the general, says industry to the S&P. So the stock charts will already figure it out when you pull up that stock, what industry it's in. It knows the symbol because you called up the symbol, and then you can compare that symbol to the industry group. And when you write in industry, write the whole industry in there. And this is just there. So that way you can see how you can add that to your charts, but it really does help discriminate between, those performers overall, whether the industry group is doing well, and then looking at how it's doing against the market and its industry group as well. One small concept, though, I do want to bring up is that sometimes you will see some outperformance. So, for example, if we went back into, let me just figure out a good chart here. I think that here's Provident. And I'm going to make this a 2-year chart just to give us a little bit more perspective here. All right. So in the midst of this downtrend in the bear market, you can see that in some cases, like right here, that we're getting outperformance, right, against the industry group. But overall, the market and the industry group are underperforming. They're moving down. So outperformance in a bear market can mean that it's just moving down slower than the rest. So it doesn't always mean that you're getting, positive outperformance. I mean, it's positive that it's not going down as far. I mean, we talk about beating the S&P, and you're considered, if the S&P is down 3% and you're down 2%, you're considered outperforming. Well, you're still ending up with a loss. So you have to keep that in mind. And that's another reason why you want to see all of these pointing in the upward direction, or at least flat, so you know that it is performing within the average of that group. All right. Anything to add to that? I know you study the relative strength as well. And then
yeah, that is a very, very key component of my work. And I was brought up, if you will, with 15 years at William O'Neill and Company. And that relative strength metric is critical, front and center, to my work relative to other indicators. It's all about getting in front of that top performer as it's just starting to move. So later in the show, I'm going to share with you an area that a lot of the stocks do have top scooter ratings now, but when first entered or detected, the scooter ratings were more modest. So how you can get in front of them just as they're starting to potentially take off.
Yep, absolutely. So again, here's that relative strength rising of the PFS against that industry group, but look at what it's doing during that time. It's in free fall. So just because, again, you see that outperformance, you want to make sure that it's not just the fact that it's moving down slower. So, all right, well, we'll go into break and we're going to come back and we're going to talk a little bit more about stocks in particular. All right, we are back. We're going to talk about this, not that. I don't know if you remember, Mary Ellen, but there was a book about diet, and it would show a picture of the unhealthy thing and a picture of a healthy thing, and they'd say you should eat this, not that. It would be, in the same crunchy snack, but it's, crunchy
An apple,
carrot versus
not cotton candy.
Right. So we're going to kind of take that approach. We're going to look at within some industry groups, a couple of stocks and compare them so you can see how this outperformance component can really help you. So I'm going to go ahead and start, and then Mary Ellen, I'm going to have you do some of the ones that you are considering and looking at. So the first one I was going to look at is in the semiconductor industry group. And there's two names that are pretty popular, AMD and Micron. And so I wanted to show you AMD. Obviously, just from the price chart, you can kind of tell this one isn't performing so well. It's in a declining trend, right? We have a negative RSI. So there are other things here on the chart already telling us that this probably is not the best performer when it's within its group. And that is very true. So semiconductors have been outperforming in 2021, but what's been happening to AMD? It's performing worse against the S&P, and it's also worse as far as its industry group. It's continuing down. So that would be the not that. the this would be Micron. So look at the difference in this chart. Very different appearance, correct? We already can tell that this one's stronger than the other, but I wanted to give you that example. So you have it in a rising trend, positive RSI. So again, you kind of can tell this is a different chart altogether, but look at the difference here in the outperformance. Micron has been consistently outperforming since the end of January, and it's also outperforming since the end of January against its industry group. So if you wanted to pick one of the stocks to invest in, I would be looking more at Micron versus an AMD. And then one more that I'll give you, and that is in the steel industry, which is another one that I've been following. I think that it's continuing to do well. I've been talking up steel probably since, well, at least mid-February. And we've been seeing some great moves in steel. So we have a really nice rising trend here, which, we are seeing in a lot of these steel stocks. And so here we can see the outperformance of the industry group. You can see the outperformance against the SPY for NUE. And then, of course, it is outperforming its industry group slightly there. So what's a different one we can look at? Well, I have US. Whoops, not that one. Come on, there we go. All right, so we have the rising trend going on here on US steel, but a lot different look when you look at the performance, and it has been underperforming. So this would be the not that. You would probably want to go with NUE versus X. So that's another example. And then actually, I'll just throw up one more. Recreational services, Royal Caribbean, obviously making a nice move to the upside. You can see all that outperformance going on, but now you compare it to Norwegian, I believe that is, yes, Norwegian Cruise Lines. It's also in a nice rising trend here. And we've got the, the buy signal, everything's great. But when you compare it to its industry group, you're probably better off with Royal Caribbean.
Very good. Yeah, a lot of that's going to be news related as well, with RCL announcing that they are starting cruising in March, mini cruises in Italy, and then the next month, longer 7-day and longer ones. So people with Royal,
getting a big pullback, but that always offers better entries, does it not?
Absolutely. Yeah. So I'm going to go ahead and share, and you'll see a little bit in the way of commonality with the theme, because I am very close to semiconductor stocks. I follow them very closely. It's an area that has been a relative outperformer, really going back, coming out of this bear market. So I've had a number of winners on my MEM Edge report from this area. From here, I'm going to share with you a not hot, if you will, stock, and it was a winner for us. I'm going to share with you how we knew that the stock was not going to be heading higher any longer. This is Qualcomm. We did get into the stock back here in May, and it was a big winner. These gaps up on earnings, it was a triple-digit winner for us. But once the stock broke below this 50-day simple moving average, take a look at that volume. We were out, moved on to other names. Now there is a name that is more of a yes, and this has been a big winner for us, and it is still on our list. It's Lam Research, LRCX, and this is a semiconductor stock that is involved in memory related stocks. We did get into the stock back here. It's held support. It did pull back with the group back to that 50-day, but and it is getting hit today. There is no doubt about it, but we did note that the industry is getting hit as well. But you can see that clear difference between those two charts. And I want to see if I have I may need to cut it short here, but I just wanted to share with you another way that you can quickly get in front of, because financials, bank stocks have been doing really well. So what I've done here is gotten into the bank area. I'm just going to pull up KRE, that's the regional bank index. You can see this big relative outperformer, another big winning area for my MEM Edge report. We did get into bank stocks back here in November. So what I've done with this scooter rating is gone ahead and pulled up financial stocks and then banks. From there, I sorted it by market cap. I want to be in larger, more liquid stocks. That's just my bias. So it is going to sort it by market cap and large. And I do have 4 bank stocks on my list. We put them on in November. 1, 2, 3, 4 of them are up here in that forefront. But I will tell you, when we first put them on, their scooter rankings were not as high. So you can, when a group is first beginning to emerge, you can go into that group and sort it by scooter. Oftentimes they'll be in that 80 range, not up in that 90, and you can take advantage of that move.
Absolutely. One of my scans, I actually scanned just for scooters between 60 and 80, because you are trying to get in there early on some of these. And when they're in that mid-range, that is a really good time to look at them. All right, really quickly, we'll look at a few of our favorite outperformers. And Mary Ellen, since you have the screen, I'm going to let you pick a couple of stocks you're watching that are outperforming. I'll throw some up there, and we'll get into our final segment after that.
You bet. Okay, so communication services is an area that has perked up a bit with companies coming out with really strong earnings. So one of the top names in that space is Pinterest, P-I-N-S. Now we can see that it is marking time here, but relative to the market, it is relatively holding in well. You can see that the RSI, unfortunately, and the MACD are declining, but that is not entirely unanticipated given the extensive move. So when I'm looking at Pinterest, I am going to anticipate more a lengthier, perhaps sideways move similar to this November period before another leg up, but that is a name. Also, we can take a look at a little bit of a smaller computer hardware stock. This is Seagate Technology, STX. It's in there with Western Digital, some bigger names that you might know, but we can see that it's in a very confirmed, clear-cut uptrend, really ignoring the downward pressures that the broader markets are putting upon us, certainly within technology this week. So this one is certainly on my radar as well.
Excellent. I've got a few for our viewers as well. I'm going to start off with Deutsche Bank. My scans have just been peppered with tons of banks, clearly an outperforming group. You can see that right here, how banks have just been really outperforming the S&P. And so I went in to try and find some that I liked. It's obviously having a great day. I did bring this to the table to my diamond readers yesterday, and it looks like we're going to continue this uptrend. I'm noticing a lot of the banks are oversold or overbought as far as the RSI, but I'm forgiving that because it's just in a very strong group. And you can see that they can stay overbought for quite a while when they're on a nice run. That's that winners keep on winning thought.
All right.
Road is another one. Finding that industrials, heavy construction, and that industrial machinery, I'm starting to see some outperformance there. You can see that group performing well. And then you can see road is performing quite well against its industry group and the SPY. Well, we're going to move on, but the other one I would look at is American Express. AXP is another one that I like that's outperforming. All right, so I actually dug this story up, uncovered it. There was a sheep that had been living, was wild, and they found it, and it was just, you should look this up, just covered. It had not been sheared forever, right? And when they did shear it, there were 78 pounds worth of wool coming from that. I know you have a few stocks to look at, Mary Ellen. What you got?
Yeah, and hopefully they made a couple of nice sweaters there with all that 78 pounds of wool.
I wonder how many that actually would make.
I'm thinking, yeah, clean it up. One stock here we can look at is Canada Goose, GOOS. They do provide outerwear. This is a different animal. It's duck goose down that's filled. We can see this gap up here. Big numbers as far as earnings and big volume. The stock is now catapulted into a very nice uptrend.
Excellent. All right. Well, I think we have time for maybe one or two more. So what you got?
Burlington Stores. This is, as you had noted earlier, it's Burlington Coat Factory, another stock that is just now poised to break out of this nice 2-month base. We are getting nice momentum indicators on the outside. So this is another consideration. One last one that we can look at is Deckers. These guys do the UGG boots, that is sheep shearings that are used, and the stock is also in a confirmed uptrend, not overly dynamic, but certainly if you own it, you can stay with it. The momentum indicators are kind of trending sideways, but those are a couple of animal related lovely outerwear.
Well, it's already time to say goodbye. We really love for you guys coming here and watching. Hope you enjoyed it today, and happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.